If you're watching this video, you're most likely a small business owner or an HR professional who has been tasked with the responsibility of figuring out the best type of retirement plan for your company. Well, look no further. We're going to cover the major types of plans that exist and explain the pros and cons of each one to get you pointed in the right direction. Hey guys, what's going on? I'm Robert Montez, financial advisor with Link Financial Advisory, where we are focused on helping you win with money. So as I mentioned earlier in the intro, finding the right type of retirement plan is such a big decision. It's big in that it impacts your ability to recruit and retain key employees, but it also impacts your ability to save for your own personal future if you are the business owner. And unfortunately, with these types of plans, there's a lot of information that isn't really discussed. And a lot of times I see that financial advisors just kind of sell products versus offer total solutions. So I wanted to go through the major types of plans that exist and just kind of point you guys in the right direction and give you some information so you can approach future conversations with a little bit more input and a little bit more data. So let's start with the most popular type of retirement plan, and that is going to be some version of a 401k. So I say a version because it could be a 401k if you have a for-profit company, a 403b if you're a nonprofit, a 457. All of these are pretty similar in their structure. The name 401k comes from the section of the tax code that discusses these types of employer-sponsored plans. Now, why are they so popular? I think a lot of it has to do with the fact that large corporations, 401ks are typically their best option for offering some type of retirement vehicle for their employees. Why do I say that? Well, any business that has over 100 employees in it has to pretty much use a 401k. They're not eligible for a lot of the other types of plans we're going to use. So it's kind of the default, and as a result, most of us get familiar with it because at some point of our lives, most of us have probably worked for a large company that had a 401k. Pros and cons. The pros of a 401k is that you have the most options when it comes to how you want to set these plans up. So everything from the matching formula, your vesting schedule, your investment lineup, eligibility requirements, everything as far as options, this is really where you get to kind of tailor make this to what's going to fit your business, which is really nice. They also have the best name recognition. There's a lot of benefit in being able to say, hey, we have a 401k plan. If you look at the reasons why people set up employer-sponsored plans, it's typically three reasons: to recruit and retain key employees, to reduce their taxable liability, and to max out their retirement savings. So with those goals in mind, to tell someone who's a potential candidate working with you, we have a 401k, that can go a long way. They also have higher contribution limits. So if, as a small business owner, you're looking for a way to maximize your ability to reduce your taxable liability, 401ks are going to offer some of the highest limits in the industry. Now let's look at some of the cons. The cons with the 401k are not so much negatives as much as they're just things you have to be aware of. Number one is cost. So if you look at a 401k, all assets that go into a 401k have to be put into a trust account. When you set up a trust account, there's rules that you have to follow and there's additional expenses to administer that trust. With a 401k, typical costs you're going to see, and this is by no means extensive, but the main cost you're going to see that you have, an advisor cost, so you'll have a financial advisor, you'll have a third-party administrator, and you'll have the custodian who's actually holding the assets. Well, all these people are working in line with the trust account that's set up, and so it just costs more. Again, not necessarily a bad thing, but for a small business, these costs can be pretty expensive, and I'll give you a comparison here in just a little bit. The other thing that I think a lot of small business owners miss is that, because a 401k is a trust document, there's additional fiduciary liability and fiduciary responsibilities that the plan administrator and plan fiduciaries are subject to. This is one of the biggest things that I think gets missed when advisors are talking to people about setting up a 401k, is that as the plan sponsor, which oftentimes is the small business owner, you have a fiduciary liability to make sure that all decisions you make are in the best interest of the participants and their beneficiaries, that you're only paying reasonable fees, and ultimately that you're approaching each decision you make with the prudence and skill of someone who has experience in the industry and experience with these types of situations. That can be scary, especially when you start looking into ERISA law. ERISA law is about a 530-page PDF of rules and regulations of how these plans have to work. And let's be honest, most small business owners don't have the time to become experts in this field, and really don't need that additional fiduciary liability if someone gets upset and decides to come after them and sue them because they feel like there was an error made. So that right there, I think, is a big deterrent for a truly small business where maybe the costs are a little bit more than what they need, and maybe the additional fiduciary liability isn't what they want. Because if you're going to run a 401k right, one thing I'll tell people all the time is that you have to approach these 401ks with the understanding that the rules in ERISA are written for the largest plans. Meaning if we went to a Fortune 500 company where they have 500 million or $1 billion in the plan, well, yes, we want to know that there's a set standard of rules in place to oversee this account. But you as a small business owner, you may be starting with no assets. You may be starting with only $1 million or $2 million in a plan, in a current plan. So to take on that additional liability, it can be a little bit scary and maybe not the best fit for a truly small business. Let's go into the next type of plan, which I think is one of the most underutilized best resources for small businesses. This is a simple IRA. So simple IRA, simple is a savings incentive match plan for employees. It is a retirement plan that is built specifically for small businesses. So it is technically an ERISA plan, but it's not subject to the majority of the ERISA rules that you find within a 401k. The limits on a simple IRA are still high. They're a little bit less than what you'll find in a 401k, but for most people, if they need higher limits, they can just mix this through, setting up an additional traditional IRA or a Roth IRA. We'll go over that in a little bit, but you can still get some pretty high contribution limits on your simple IRA. The awesome thing about a simple is that if it's set up right, it can look and feel and act and like all the major features that people like with a 401k. A simple IRA can replicate the majority of those. What do I mean by that? With a simple IRA, you still get the ability to match contributions for the employees. You can still get an incredible investment lineup. You can still get easy to administer online portals to make contributions and sync that up with payroll. So it can look and feel like a 401k. It's just built for small business owners. I think this is typically the best option for a lot of companies, just because you're not having to play by those same ERISA guidelines that you find with 401k plans, and for what most business owners are trying to accomplish, which again, recruit and retain key employees, reduce their taxable liability, and also maximize their retirement savings. A simple IRA for most people will do this. So earlier we were talking about 401ks, and just to give you guys an idea of the difference in cost between a 401k and a simple IRA. I recently had a client that they have about 6 employees, and they were looking at setting up a retirement plan for all the reasons we've talked about, primarily recruiting, retain key employees, and just showing that the employees are valued. Well, I ran their options, and then we looked at the 401k options through 3 different providers, and then we also looked at a couple different simple IRA options. Each one of the 401k providers, from the lowest cost up to the most expensive, was around $3,200 up to about $4,200 per year. Now, yes, there's tax credits with Secure 2.0 where they get all that money back for the first few years, but after the first few years, those tax credits go away. So let's just call it about $4,000 is what they're looking at. These different places also typically had setup fees anywhere from $1,000 to $1,500. Now, just our business, we can typically get those waived, but if we could, and let's just say it was going to cost them about $4,000 just to set up the plan on a 401k. That's kind of expensive for a small business that's already looking at ways that they can keep their expenses low. We compared that with the simple IRA. Now with the simple, it didn't have as many bells and whistles and features as we could have done with the 401k, but the simple IRA only cost them $25 per employee per year to administer. So literally like a fraction of the cost. And so it's a lot easier for a small business to say, yeah, we'll take this plan over here where maybe our total costs are only $150, $200. They still get the same tax credits from Secure 2.0 where they get all that money back. But now they have a plan in place that's accomplishing their goals of providing value to their employees through the recruit and to help them recruit and retain those key employees, save for retirement, and it's still giving them some tax reductions in the simple IRA just through the contributions they're making. So that's just kind of a comparison, as you can see. I have another person I'm meeting with where he needs all the deductions that he can possibly get. So yes, we are looking at a 401k for him because the limits are so much higher than a simple IRA, and paying the extra couple $1,000s in fees to set it up, it's going to save him so much more in taxes to go the 401k route that those fees are kind of a moot point. So hopefully that kind of gives you an idea of when we're looking at different scenarios. So a good question I'll ask for people when they're trying to decide which plan they want to use, whether they should use a simple IRA or a 401k. The first thing I'll ask them is, well, do you need to put in more than $15,500 every year? Are you planning on doing that? If the answer is no, then the simple is fine, because the simple IRA has that $15,500 limit contributions for 2023. If you're over the age of 50, that goes up to $19,000. If you're not planning on saving more than that in the first place, then you can just probably stop there, and a simple is probably going to be the route you want to start looking into. If the answer is yes, I do need higher limits, okay, now we'd start looking at the 401k, because now we're probably looking for ways to maximize your tax savings. The third type of plan that is another great tool, and again, often underutilized, is going to be a SEP IRA. SEP IRA, I believe, stands for Simplified Employee Pension. I'm going off the top of my head, but I believe that's correct. If not, I'll put a correction in there. A SEP IRA is essentially you self-funding a style of a pension. It's not a true pension plan, but it looks and feels and works like a traditional IRA. The rules are all the same. They just have higher contribution limits. Where SEP IRAs are the best fit are for very tightly held small businesses. So sole proprietors, maybe a mom and pop shop where they don't have other employees. It's typically for, like I said, like husband, wife, or just, solo practitioner type companies. Why are SEP IRAs great? Well, SEP IRAs give you very high potential contribution limits. With a SEP IRA, you can choose to defer up to 25% of your income into this type of plan. That goes up to a maximum here in 2023 of $66,000. And again, there's no trust documents. It's just an individual account, and they're very cheap to administer. A lot of companies, they maybe charge you 15 or 25 bucks, between those per year to have these. It's a great tool as well for tax savings, just in that it can lower your taxable liability. So my wife and I, we have SEP IRAs, and it's nice because we can go in after all of our deductions, especially if we filed an extension. With a SEP IRA, you can make prior year contributions up until when you file your taxes, including all the way into the tax filing extension deadline. That's kind of nice, because for us, like small business owners, we can go through, we typically do an extension now, so that way we can get everything set up. It gives a little bit extra time to build up some reserves. And then when we meet with our tax guy, we figure out what our total profit is after all of our itemized deductions. Whatever that number is that's left, we can take 25% of that and put it into our SEP IRAs to further lower our tax liability while also saving for our retirement. What we'll typically do, and this is just a free tip, is that we'll take that money, and even though we put it in as a lump sum, we'll have it dollar cost average, where it's systematically, it will just sit in a money market account, and then systematically, whatever the total dollar amount is, we have that move week by week. We break it up over the course of a year, so we're systematically putting the money into the market, and we're not just throwing all of it as a lump sum one time. Free tip, but that is kind of the benefits of a SEP IRA. The cons of a SEP IRA: it is not right for small business owners who have lots of employees. The reason being is that it has to be treated equally for everyone, meaning that you can't go out as a small business owner and put 25% of your income into a SEP IRA and then just kind of leave your employees high and dry. Whatever you put in for one employee, you have to put in for all employees. So you can see where this kind of starts to lose its allure, is that if you wanted to save 25% of your income, well, now you have to put in 25% of everyone's income to a SEP IRA. As you can see, that's not a winning proposition if you have a lot of employees. It gets very expensive. The next type of plan is going to be for small businesses that maybe want to offer a retirement plan. Retirement plan, I'm going to put that in air quotes, but they're just tight on cash. And that can be a real thing. Maybe you have a few employees, but maybe you're an up and coming business and you're just not sure that you can afford to do any type of match. Well, probably the best option for you there would be to look at doing what's known as a payroll deduction IRA. What a payroll deduction IRA is, it's not technically a retirement plan as far as like an employer-sponsored retirement plan. It's just an individual retirement account. You can choose to set these up as traditional or Roth IRAs. And what's nice with these plans is that it's giving you the ability to set up IRAs that are just deducted from your your employee's paycheck. Now, when we set these up for clients, we'll still come in, we'll still do an educational overview, we'll still agree to meet with clients, And it's, again, you can get a lot of the benefits of working with an advisor. It's just that everyone has their own individual account. So it's not technically an employer-sponsored plan. It's just everyone is setting up their own individual IRAs, then letting you know, hey, I'm deferring 5% of my income to my IRA, and then you just set that up as a payroll item when you're running payroll. This is really nice because there's literally no cost to you as a business owner. All the costs are paid, again, if there's a $15 or $20 annual fee for the account, that's all paid by the employees. And it can make that really, really easy where you can get some of the features and benefits of like, hey, we're offering the ability to save for retirement through a payroll deduction, which is kind of nice. Unfortunately, there's no match with that, but as you get more profitable, then you can look at doing that. The last type of plan that exists is going to be known as what's called a cash balance plan. Now, these are true pension plans. These are plans that we typically are using for our clients who need the absolute maximum deduction amount. The way that a cash value plan works is that you are setting up a pension plan for your business. Now, with these plans, again, we have to go through and make sure they're the right fit because you do have to have essentially a profit share for your employees. And so when we construct these plans, we're typically doing it because we have a very high earner who is looking for every possible deduction they can find. So we'll construct these plans in a way where they're able to keep a majority of the profit share that they have, but still share some of the revenue with their employees, and do so in a way where it makes sense, where instead of paying, Uncle Sam, the business owner gets to keep a majority of that, as well as give some additional retirement savings to his employees. Cash balance plans work where you have a lifetime maximum that you can put into. And I believe that maximum right now is $3.4 million over the course of your life. What happens is that number is then, we take that $3.4 million and it's based on a scale of what your age is. So if you're younger, they're assuming you have more time to put more money in, so the amount that you can put in is lower. If you're older and closer to retirement, hey, you have a bigger amount that you can put in to get to that $3.4 million and get those bigger deductions. We have clients oftentimes who are putting in $300,000, $400,000, $500,000+ per year. And this is huge for them because they're able to save a very large amount towards the retirement, but those are dollar for dollar deductions on what they have to claim on their adjusted gross income. So it can be a great tool to save for retirement while also giving people some tremendous tax deductions if they need those. Guys, my hope with this video is that I've given you a little bit of information to understand the different types of plans that exist and just allow you to walk into a conversation a little bit more informed. Why I want this to happen for you is that I see it all the time where people just get sold something. No one's sitting down and really going through and figuring out what they're trying to accomplish, why they're setting up the plan, what their budget is. And if people don't know any better, I think a lot of times people end up getting just sold 401k plans, even though they're one of the most expensive and honestly most risky types of plans for plan administrators, just because that's what advisors do. They just sell what they're taught to sell without really understanding what other options exist or what ways something else might fit a client better. If you'd like to learn more, I have all this written in a dedicated article that has a tool that's designed to show you a path to figure out which plan is best for you. So I'm going to put that link in the description. If you already have a 401k, we have another tool that you can use to benchmark your 401k in about 10 minutes, and it will score your 401k on a 1 to 100 point score. It'll then allow us to put together a report that shows you exactly what you could do to improve your 401k and just make it work a little bit better. I'm also going to put that link in the description below as well. As always, if you have questions, we're very responsive. We'll get back to you guys. You can find my contact info listed below. You can check us out at linkfinancialadvisorymt.com. Thank you guys so much. Really appreciate you watching. And hey, hope you guys are doing great and winning with money. Take care and God bless.